In this video, I'm going to share with you the best mechanical ICT trading strategy that has helped hundreds of our members not only get funded, but to become consistently profitable traders. I'm going to break down this strategy step by step. There are 4 steps in total. Step number 1 is identifying directional buyers. Remember, everything in this strategy is fully defined and it's fully mechanical. So let's turn the lights on. Right here, you can see we have the 50, the 100 and the 200 exponential moving average. The 50 is less than the 100, which is less than the 200. This indicates that we are sell bias on this market because it's super important when you turn up to the markets. You need to know whether you're looking for longs or whether you're looking for short. So using the EMAs just like this gives us a mechanical framework to identify whether we're long bias or whether we're short bias. Cool, so I'm gonna remove the EMAs, but please keep in the back of your mind that we are sell bias on this market. That point was good, but if you don't understand this concept, there is no way that you will ever become profitable. Step number 2 is identify buy-side liquidity. And again, guys, everything is very mechanical and fully defined. We can identify buy-side liquidity by simply looking at the sessions. And all that I simply mean is we have the Asian session right here. And looking at this from a New York perspective, that is from 7 p.m. until 12 o'clock midnight. And we can simply identify buy-side liquidity, which is resting above the Asian session high. And for anyone new here, what is liquidity? It's simply where there's a lot of stop losses and there's a lot of buy stops within the market. And liquidity is simply used as fuel in order for the institutions to move the market in the intended direction. Okay, step number 2 is important. But if you don't understand step number 3, you will lose hundreds of thousands of dollars. And step number 3 is run on liquidity. And all that simply means is we're looking for institutions to run the buy-side liquidity that's resting above the Asia session high. Once we see that, we can look for a potential short trade on the market to go with our directional bias, which remember is sell bias on this market. And I've been in your position. You're going to ask me, why does this work? And it's very, very simple. You see, the Asian session has accumulated orders. This is just simply institutions engineering liquidity. And then what this move right here will be doing, this right here will be manipulating traders because they will see this as a breakout. They will think the market is going higher. And this move will manipulate traders, enticing them long within the market. Also, any early sellers from the Asian session, think logically about where their stop losses are going to be. And because we know that retail traders like to use tight stop losses, we understand their stop losses will simply be resting above the Asian high. So it's at this moment right here that will entice breakout traders who are blindly longing the market, not understanding context and not understanding directional bias. And I've been in the same position as you, where you see a breakout, you take a trade, and price just simply reverses in the other direction. And that's okay, but now that you understand run on liquidity and what we're looking for, you can completely retrain your mind on how you see the markets. Okay, step number 3 was great, but it literally means absolutely nothing unless you understand when to enter within the market. So step number 4 is confirmation. This is super, super important. Let's just zoom in here so it's very, very specific. You can see right here, we run the buy-side liquidity during the London session. London session is between 3 a.m. and 5 a.m. That is New York time. And all that we're simply waiting for once we see the run on liquidity is a bearish confirmation, because that indicates to us that sellers are actually stepping into the market. So we get our bearish confirmation right here. We can enter a sell position on the break of that candle low with invalidation just above the liquidity sweep. And now this is super important, guys. This is where so many traders go wrong. We trade a simple, mechanical 1 to 2 risk to reward. We're not looking for a home run. We're just looking at taking small, repeatable, bite-sized pieces out of the market with a mechanical framework. Okay, so we're triggered short right here. And we understand that either we're going to be stopped out at a -1R, or we're going to hit take profit at a 2R. There's no in between, there's no micromanaging. It is essentially set and forget. And this is where you have to be extremely patient. So you can see price pushed down towards our take profit, and now it's back to entry. And this is where so many traders go wrong, getting emotional, closing trades early, but no. What you have to do is remain patient, and we have defined risk. So either we're stopped out or take profit is hit. Don't get emotional, don't micromanage. And you can see during the following day in the New York session, this trade hits take profit for a 1 to 2 risk to reward down at the lows right here. And so many traders would have fell into the trap of micromanaging, closing this at break even, closing this when you see a bullish candle. But no, guys, remember we've defined risk in a mechanical framework. We're either stopped out or take profit is hit. Because if price did push up and break this high, this would invalidate our bias. This would indicate that buyers are actually stepping back into the market. And so this is absolutely everything that you need in order to become funded and consistently profitable. If you follow these simple 4 steps, I guarantee that within 2 to 3 months, you will become funded and you will become consistently profitable. This video has literally uncovered absolutely everything that you need to know. However, if you do want results faster, then make sure to join my exclusive community. The link is in the description down below. I personally look forward to seeing you on the inside.